Hello friends, we will continue with our discussion on the topic of retirement of partner, right? And in the last lecture, we started with a new topic in the case of retirement, that is adjustment of capitals, right? What we did in this, we said that the new partners, or I can say the continuing partners, they have to adjust their capitals. They decide to adjust their capitals in their new profit sharing ratio, right? That means if their profit sharing ratio is 2:1, then their capitals should be like 2 lakh and 1 lakh, right? That means their capitals should be in their profit sharing ratio, new profit sharing ratio between the continuing partners, right? How they do the adjustment? In the case 1, I told you that we are given the total capital of new firm, right? So according to that, we will calculate what should be the share of the new partners and what is the new share of new partners, and we will find out the difference. Either they will bring in some cash or they will be paid some cash by the firm to make their capitals in their new profit sharing ratio. Clear? Then second case, I told you that total capital of new firm is not given. Okay. How to calculate the total capital of new firm, I told you in the last lecture, right friends? So you can refer to the last lecture before you continue with this. Okay. Now, in this lecture, we are going to touch upon the third part, right? What is the third part now? The third part says retiring partner is to be paid through amount brought in by retiring partner is to be paid through amount brought in by remaining partners right, in a manner that make their capitals proportionate to their share of profit. Okay. What they say is, what is the purpose of adjustment of capital? To make the capitals of the remaining partners proportionate to their share of profit. They say how they adjust this capital is they are paying the retiring partner by bringing the amount that is payable to the retiring partner. Okay. How they do this? Let's see a practical problem on this. We will learn through a practical problem. Okay. Read this. They say X, Y and Z were partners sharing profits in the ratio of 5:3:2 respectively. Y retired on 31st of March 2016. On that date, the capitals of X, Y and Z, after all the necessary adjustments, these are the capital balances after all the necessary adjustments. Be careful with this. All the necessary adjustment means adjustment regarding goodwill, revaluation, reserves, everything is done. We have got the final balances, balance carried down of the capital accounts of X, Y and Z. So the balances stood at 43,200, 36,600 and 11,200. The cash and bank balances on 31st March 2016 amounted to 4,000. Clear? Y was to be paid through cash brought in by X and Z in such a way as to make their capitals proportionate to their new profit sharing ratio, which was to be X 3/5 and Z 2/5. That is, the new profit sharing ratio will be 3:2. Right? Calculate amount of cash to be paid or to be brought in by the continuing partners, assuming that a minimum cash and bank balance of 3,000 was to be maintained. Clear, friends? Go through the question once, especially from the line where it is written that Y was to be paid through cash brought in by X and Z in such a way as to make their capitals proportionate to their new profit sharing ratio. What is the new profit sharing ratio given? This is given as 3:2. Okay. Shall we start? Okay, let's see. There are three partners, X, Y and Z. They are sharing profits in the ratio of 5:3:2. Y retires. Right? Capital balances after all adjustments. What are the capital balances after all adjustments? 43,200, 36,600 and 11,200. What are the capital balances? 43,200. Then for Y it is 36,600 and for Z it is 11,200. Please friends, keep this in mind that these capital balances are after all the adjustments. Adjustment means adjustment regarding goodwill, revaluation, profit or loss and reserves. Clear? So these capital balances are after all the adjustments. Now, can you tell me, Y is retiring? What does this capital balance of Y reflects? What is the meaning of this capital balance? We are given the capital balance after all the adjustments. Do you remember I told you how to calculate the amount payable to the retiring partner? 2-3 lectures back, I told you how to calculate the amount that is payable to the retiring partner. How to calculate that? What we do is we figure out all the adjustments. That means if there is an adjustment regarding the revaluation of assets and liabilities, we prepare revaluation account. Okay. Then we prepare the capital accounts and give effect to all the adjustments and find out the final balance of the retiring partner. Then what we do with that balance? There it is written. There we discussed that that balance is transferred to his loan account. Isn't it? So what this is the capital balance after all adjustment, or I can say this is the amount that is payable to retiring partner Y, because this balance is after all the adjustments. Okay, so I can say that this is the amount that is payable to the retiring partner Y. Clear, friends? Now, what is the new profit sharing ratio? New profit sharing ratio between X and Z is 3:2. What is the new profit sharing ratio? That is 3:2 between X and Z, right? Now, what is the existing cash balance? If I talk of existing cash balance, they say the cash at bank balance on 31st March amounted to 4,000. I can say the existing cash balance or bank balance is 4,000. Right? Now, interestingly, they have given one more thing. See the last line. They say minimum cash and bank balance of rupees 3,000 was to be maintained. At any point of time, your cash and bank balance should not go below 3,000. So you have a total of 4,000. Out of this, you have to keep 4,000 because there is a requirement. So I can say minimum cash balance to be maintained. How much is the amount? They say at any point of time your cash and bank balance should not go below 3,000. So what is this 1,000 reflects? This is cash and bank balance available for, what is this available for? Payment to the retiring partner. Clear? Because the question is clearly saying that the retiring partner is being paid through cash. So how much cash we are having? 4,000. But it says we have to maintain a minimum cash balance of 3,000. Right? Then how much is the cash available for payment? Only 1,000. How much is the amount payable? How much is the amount payable to the retiring partner? How much is the amount payable? I told you we are given the capital balances. After all the adjustments, this reflects the amount that is payable to the retiring partner. What is the amount payable? 36,600. Amount payable is 36,600, but we have only 1,000 as cash and bank balance. So what is the shortage? So we can say shortage of cash. How much? Sorry, this is 36,600. Okay. So I can say 35,600. How much is the shortage? 35,600. Clear? Is this much clear, friends? What we have done is we have calculated that how much cash is required to pay the retiring partner. How much cash we have and how much more cash we require to pay to the retiring partner, because the question clearly says that we have to pay to the retiring partner in cash. If there is any shortage of cash, that will be brought in by the remaining partners X and Z. That is clearly written in the question. Go by the wordings of question, what the question is saying. Okay. So now this shortage of cash 35,600, who will bring this shortage? Obviously the remaining partners will bring this 35,600. Okay. Now what is the existing capital of X and Y? If we talk of existing capital, if I say existing capital X and Y, what is the existing capital? 43,200 and 11,200. 43,200 and 11,200. So this total comes to 54,400. This is the total capital of the remaining partners. Okay. Now they say the cash this shortage of cash, this is also to be met by the continuing partners. So they will have to bring in cash equivalent to 35,600. Right? So we'll say shortage of cash to be brought in by X and Z. How much is the shortage of cash? 35,600. So what is the total amount? What is the total amount that is being brought in by X and Y? This comes to 90,000. Right? 54,400 is the existing capital of the remaining partners. They say they have to, the remaining partners will pay to the retiring partner. They will bring in cash equivalent to the shortage that is not met by the cash already existing in the business. So this shortage also is being brought in by the remaining partners X and Z. Right? So this is the total capital of new firm. Right? Because this is also the amount that is being brought into the business by X and Z. So this will also be considered as the capital of the remaining partners. Capital brought in by the remaining partners. So this is the total capital of new firm. Now you have got the total capital. It becomes very simple. Okay. X and Z. What is the new capital? 90,000 divided in the ratio of 3:2. What is the new profit sharing ratio? 3:2. So this comes to 54,000 and 36,000. What is the existing capital? What is the existing capital? Existing capital is 43,200 and 11,200. Now the question says, what does this mean? The capital in the new firm of X should be 54,000, whereas the existing capital is 43,200. So he will bring in cash equivalent to 10,800. Clear? Then for Z, the existing capital is 11,200, whereas the capital in the new firm for Z should be 36,000. So how much is the shortage? 24,800. So he will bring in 24,800 into the business, right? And if you combine this, interestingly, this comes to 35,600, right? This is the amount. This is the shortage of cash which was to be paid to the retiring partner. This is how we will adjust the capital of partners by paying in cash to the retiring partner. Clear, friends? Let's go through this once again. We say the retiring partner is to be paid through amount brought in by remaining partners in a manner that make the capitals proportionate to their share of profit. Right? There are three partners, X, Y and Z. 5:3:2 is the profit sharing ratio. Y retires and we are given the capital balances after all the adjustments. Clear? So we have the capital balances after all the adjustment that reflects the amount that is payable to the retiring partner Y, 36,600. New profit sharing ratio is 3:2. Then the question says, now this retiring partner Y is to be paid through cash. So first of all, we have to see what cash is available with us. They say the existing cash balance is 4,000, but out of this 4,000, they say the minimum cash balance to be maintained is 3,000. That means at any point of time you must have a cash and bank balance of 3000. So what is the free balance available for payment? Only 1000. What is the shortage of cash? 35,600. Right? So this shortage of cash will be brought in by the remaining partners X and Z, because the question says that the payment to the retiring partner is to be made in cash that will be brought in by X and Z. 1000 is already there in the business. Whatever the shortage is, it will be brought in by X and Z. Right? So what is the existing capital? 54,400. What is the amount to be brought in by X and Z to meet the shortage of cash? Is 35,600. So in this way we will get the total capital of the new firm, that comes to 90,000. Now you have the total capital, you have the new profit sharing ratio. You can find out how much is the amount of cash to be brought in by each partner. Clear, friends? So the new capital of 90,000 is distributed in the ratio of 3:2 between X and Z. Then we have the existing capitals at 43,200 and 11,200. Clear? Then we find out the amount of cash that is to be brought in by the remaining partners X and Z to make payment to the retiring partner Y. Clear? So this was case 3 for adjustment of capitals. Case 1 is where the total capital of the new firm is given to us. Second case, total capital of the new firm is not given to us. Third case, total capital of the new firm is not given to us, but adjustment is to be made by bringing in cash, right, by the remaining partners for making payment to the retiring partner. Clear? I really hope it is clear to you. In the next lecture, let's see what we'll be doing in the next lecture. That's all for this lecture. In the next lecture, we'll do a practical problem covering this aspect, right? A practical problem, a full-fledged practical problem where we will have the adjustment. Okay, we'll do the adjustments, we'll prepare the capital accounts, we'll find out the amount that is payable, and we will adjust the capitals. Practical problem on adjustment of capitals. Clear, friends? I hope this is clear. If you have any queries, you can always email me. You can always mail me at ksjteaching@gmail.com. Okay, you can anytime email me your queries. Okay, or you can write down in the comment box your queries. I will try to answer all the queries at the earliest. Right? So that's all for this lecture, friends. Thank you so much.